This is Patrick's Real Estate Chronicles. We're trying to explore things about the health, home, and life in general, and we're going to talk about real estate. And today we are with Mike Brustad, and he is with Guaranteed Rate Affiliate. He is a mortgage broker, lender. What do you call yourself?
Mortgage lender.
Lender, okay. So you actually have the money?
I had tons of money.
Yeah. Business is good. No. Anyway, how long have you been with Guaranteed Rate Affiliate?
Been there about 2.5 years.
And you've been doing
mortgages for 22.5 years.
So you have some insight.
Yes.
Okay. And one of the main things with conversations I've had with you in the past has been, very intelligent about where the market is. I mean, when you brought up when the Chinese, was it the yen that? No, they started charging interest. Yeah, Japanese. Mm-hmm. Japanese yen changed how it changed the market and how the interest rates and stuff. I mean, you have to look that stuff up. But with you, it was just incredible with your intelligent explanation of how it worked and stuff. I don't know how many people caught on to it, but I was like enamored by it. I
appreciate that.
I can't remember the exact the terms and stuff like that. But anyways, so what is better with Guaranteed Rate compared to any other company? What makes you set yourself completely aside?
Well, I think the best thing is that we're a direct lender. So what that means is we work directly with the mortgage companies. We have about 50 different companies that we have a correspondent relationship with. And then we also have about 50 different companies that we also have a wholesale relationship with. So if there's a way for us to make a loan, we can find a way to do it. So we just don't have you have to fit in this vanilla box for us to be able to make the loan.
So yeah, actually, you've been. I worked with the regional manager, Nick, on a few things, and and they couldn't do the loan, but they found somebody else that could help them with it. So it was, and I appreciate the fact that you're willing to accept the fact that we don't have the package you're looking for, so you can actually farm it out. Mm-hmm. And a lot of people are too. Well, we won't get into that. But anyway, so the economy has changed up quite a bit over the years. And you did something a little while ago, and I'm not sure if you still do it, because I offered it to people. They haven't taken it as a 3-2-1 buy down. How did that ever really work out in general?
Sure. So the 3-2-1 buy down is a great program, both for the seller and the buyer. So what it does is it allows the seller to buy down the rate temporarily for the buyer. So in other words, let's say that the rate is starting today at about 6%, then they could buy it down on a 3-2-1 buy down to 3% for the first year, 4% for the second, 5% for the third, and then 6% for any years after that. So what that does is that helps. Let's say that a buyer is thinking, hey, I think rates are going to be dropping within the next year or two. They're going to be down to, say, in the low 5s, maybe even the 4s. Gives them a chance, buy the home, get into it now, have a lower payment, and then refinance when the rates do drop.
Well, and that's two advantages. Now, the other advantage I really see with that is when you first buy a home is there's always expenses that you're not expecting, and not all the people selling the homes are honest with the realtors or with people. They're just trying to get their home sold sometimes, right. And so the extra money is also beneficial to everybody. So
yeah, good. And even when there's not things wrong with the home, you find out, hey, the sofa doesn't really look good in this room. Hey, I need new drapes. I need, whatever it
Absolutely.
is that you need to make your home, suit you. The average homeowner is going to spend, $20,000 when they move into a home.
Yeah, one of the main things is do not ask me, your realtor, to ask what kind of couch you put in there. Don't do it. It's not a good idea.
Yep.
Anyway, so there's also other loans that you have. Now you get VA loans. You're very, very popular amongst the other agents with VA loans. Also, do you have FHA loans?
Have FHA loans, and then we have, so one of our strong points on both FHA and VA is we have almost no overlays on those loans. So what that means is, let's say, for instance, remember when you were a kid, you might have had a curfew in your town of midnight. So the mayor said, hey, you got to be home by midnight if you're a kid. But your mother said, hey, you know what, Patrick, you got to be home by 10. Don't care what the mayor said, you got to be home by 10. Your mother just gave you an overlay. That was the mom's overlay. So a lot of lenders do that too.
Good analogy.
They put a credit score overlay or a debt ratio overlay, and we just go to whatever FHA or VA allow on that loan.
Okay. So and then with the wonderful new buyer's agreements and stuff that we have to go with, VA loans now are, well, what exactly are they? How are they helping the veterans out with working as a buyer when they're trying to purchase a home, so they may not have to come up with the money themselves?
Sure. So there's a couple of different ways that can be done there. So obviously, the best way is if is to talk with your real estate agent and let them know, hey, if you don't want to be paying the buyer's agent commission, you want the seller to be paying that commission, then let your realtor know that that's what you want. If you need help with that in terms of, a couple of things you can do there. You could, we do have some ways that we can give you, there's actually coming back into the market now that the rates are starting to drop, we can do some interest rate where you can take a higher interest rate and maybe get a credit back at closing because of that higher interest rate, and that might cover some of that for you. The other thing is we might have down payment assistance programs that could cover the majority of closing costs for you. Now, you can't use those. Most of those down payment assistance programs don't allow you to use those for paying agent commissions, but they can cover the other costs so that, you might have enough to pay off of that.
That's awesome. And what about, can you do anything with the FHA loans with that?
Yep. Same exact thing, so same sort of thing. You can maybe take a higher interest rate and get credit towards that, or use a down payment assistance program, maybe use some of those, use some of the money that you have if you have to. But, I would recommend, if it's not something you can afford in terms of the buyer agent commission, then discuss that with your real estate agents. You're looking at the home, only at homes that are going to pay that.
Yeah, and we know everything how to navigate this. Fun times. Okay, and actually we're going to keep it kind of short. Last thing I always want that everybody, what are closing costs? Okay, what kind of closing costs do they incur with the mortgage lender? Last thing, this is a serious question.
Sure. So, closing costs are going to differ per state. So I'm just going to use Florida, for example. So on your average price home, let's say $350 and under, you're probably going to run into closing costs, including your prepaid items, which are going to be things like taxes, insurance, things like that. Typically around $9,000 to $10,000. VA, a little bit less, might be around $8,000. So just depending on what you're looking at in terms of a sales price. So if you're looking at a higher sales price, say $600,000, obviously that's going to change a little bit from there. So if you need an actual breakdown, that's one of the things that I work with, because some mortgage companies, especially your online ones, they won't give you a breakdown of the closing costs.
Yeah, I noticed that.
Which I think is a real disservice to buyers and sellers, that they're not prepared, because, what good is it to get, a buyer and seller under contract for the buyer to discover, hey, I don't have this money for closing costs. I don't have the down payment plus the closing costs. So, that is both a disservice to the buyer and the seller. So one of the things I pride myself on is going to be transparent from the beginning of what you're
doing. And the one thing, about 20 years ago, when I was getting a loan, actually went into online to check it out. And one thing I did not realize is how much more closing costs they were online than they were through through here. At least that was my personal thing. That was also 20 years ago. Yes, I'm old. I have the gray hair to prove it. And that's what I try to live with. Okay, one last thing I want to end with, we're going to keep these brief, is you've had many, many loans in your life and stuff. And there's always one, like I have a house sale of somebody that sticks with me, that it just, it's not just the work, the relationship, everything like that. You ever have one that it just sticks out that you feel good about in general?
So I had one that just closed earlier this year. And this is a a young lady who started working when she was 16 years old, and she working full time at McDonald's, became a shift leader at McDonald's, working quite a bit of overtime on there, and was able to get her into a home at 18 years old.
Wow.
Getting in and making that payment. I don't, and less than what she would be paying for rent. So both she and her daughter are now in their new home, and just, I think, all the way through the process, she was under the impression, I think a lot of times, of, they're just going to be bad news at some point.
Right.
And just how thankful she was and how life-changing that is.
Oh, it absolutely is, especially at 18 with the child and stuff. I mean, oh man. Yeah, no, that would do it for me too, by the way, especially working at McDonald's. And yes, I worked fast food and I was very young too. And it was a challenge. Anyway, anyways, last thing I'll just say is thank you for showing up here, and we will talk more later. One of the main topics I want to talk to you about is going to be credit scores in the future.
Okay.
And I just want to say thank you for viewing the video. If you like them, I'm supposed to do something with like point down at Facebook kind of thing. We're not going to do that, but try to follow these, and we'll go from there. Okay. You have a good day, and thank you very much, Mike, and we'll talk to you shortly.